A very good evening and welcome to KTN Business. My name is Abi Agina. The Nairobi Securities Exchange has posted a drop in pre-tax profit of 381.5 million in its full year results for the year ended December 2015 compared to 441.8 million shillings the previous year. KTN's Ashley Mazuri breaks down the numbers.
Whilst investors with shares in bank stocks raked in billions of shillings from Nairobi Security Exchange listed stocks, low turnover at both saw a dip in profits. There is no irony to it, as 2015 saw a rise in interest rates, a volatile market, and a weak shilling that impeded market performance. The NSE posted a 1.7 marginal drop in its total income to stand at 808.3 million shillings compared to 821.9 million recorded in 2014. Profit after tax for the period under review stood at 305.6 million shillings, representing a 4.5% decrease from 320 million shillings recorded the previous year. This has been attributed to low income as trading activity fell by nearly 21% in 2015. A look at equity turnover. It dropped by 3% to 419 billion shillings from 431 billion shillings, while the fixed income market also saw a 39.7% decline to 610 billion shillings, impacted by the introduction of the capital gains tax that had negative effect on trading activity. It's however not all gloom and doom, as shareholders of the exchange are set to receive a payout of 0.49 shillings per ordinary share for the year 2015, representing a 29% increase in the 0.38 shilling dividend paid in 2014. Overall, the NSE projects a better performance in 2016 for all listed companies as it seeks to improve performance. Ashley Mazuri, KTN Business.
Well, remember Tatu City? Troubled multi-billion shilling real estate project Tatu City has finally seems to be addressing internal woes. The firm has announced plans to invest 2.2 billion shillings in infrastructure development this year ahead of kickoff of mega projects. The developers say they expect major residential and commercial projects to kick off by June, and that more close to half of the 2,500 acres of land is already sold to buyers. Rendezvous country head Nick Langford says they want to ensure there is water, roads, sewerage and power supply before the projects kick off. So far, consumer goods manufacturing and Unilever East Africa has acquired a 70-acre piece of land, setting the stage for its 17 billion shillings expansion. Apart from Unilever, Bidco and Dormans have also set their eyes for the takeoff. The producer of Omo detergent and Blue Band margarine has signed an agreement with the property developer to buy the land. The multinational is now expected to build a new factory in the location in the medium term. And now to some other news-making headlines. In keeping to form with its turnaround strategy, national carrier Kenya Airways has announced a new flight schedule that will allow the airline operate longer hours of the day in a bid to boost passenger connectivity in Africa. Ashley Mazuri has this and much more in our business wrap.
As part of its transformation program, Kenya Airways has announced changes to its flight schedules in a move set to boost passenger connectivity in Africa. Kenya Airways will now operate longer hours of the day in what has been described as 30% fleet utilization of its aircraft and crew. In a statement, KQ CEO Mbuvi Ngudze added that the rationale behind the redesign program is set to augment operations as the company seeks to return to profitability in the next 2 years. Africa being the main beneficiary, the new schedule that takes effect March 27th is geared towards enhancing intra-Africa trade and better connectivity into Europe and Asia. Avic International Real Estate Kenya has signed a management service agreement signifying the entry of JW Marriott's international luxury brand of hotels in Nairobi. The 365-room hotel will be integrated into Avic International headquarters in Africa, worth 400 million United States dollars, approximately 4 billion shillings, officially inaugurated on August 18, 2015. enforce local content legislation to help domestic farms compete against foreign companies and capture growing local opportunities. That is a message from the Kenya Association of Manufacturers to the government to protect and promote the growth of its domestic industries by introducing laws that ensure local farms benefit from huge government spending. Ashley Mazuri, KTN Business.
Many thanks, Ashley, there. Well, that brings us to the end of KTN Business News. My name is Abi Agina. Let's do this tomorrow, same time. Coming up next is the sports news.